with his cost at a target of 350 for Tesla, so that despite the stock's decline and the market's concern over higher prices, you can actually raise the final reason I believe investors aren't seeing the forest for themselves is that we're witnessing a stabilization from a margin viewpoint that is better than expected in terms of auto gross margins at $400. Tesla's Wednesday stock price valuation, many people viewed Bush analyst Dan Ives as being overly optimistic, but Ives, who once called Tesla a golden EV success story, believes that $400 is achievable. Here, in fact, in a previous note to clients, I stated that Tesla is in a tremendous position of strength after building its EV castle and is now set to further monetize its success. This can be proven true by the company's increasing ability to bring in revenue outside of EV sales. You can see units right now on a trajectory towards 2 mil. However, in the end, this is for Musk. I believe that this is just the beginning of a larger strategy because they've already developed it. For example, if you look at FSD full self-driving, and I'll argue, Sarah, that's AI. We could talk about how it's basically AI for automakers. You look at full self-driving and what happened with superchargers and ultimately now batteries. And I think the story is stabilizing from a margin perspective. The poker move massively played off from a unit perspective. And I believe that's why this year, I believe this is just the beginning. In fact, as of this month, Chinese auto market recovered in August with a return to growth in the same month that Tesla nearly doubled its market share in the nation. Traveler auto sales in China increased 2.2 year over year in August, according to data from the China Passenger Car Association, or CBCDR's analysis showed that Tesla almost doubled its market share in China in the same month, jumping from a 7.5 market share in July to a 13.2 share in August. The CBCBA data showed that Tesla sold 65 vehicles in China in August, while the automaker also delivered 65,316 Shanghai built Model I units during the same month. Because if you look at the lower prices, sacrificing prices for demand, it paid off not just in China, in the US. And I think what you're seeing right now with the EV play out, you're starting to see this green tidal wave we viewed as the biggest transmiss to the auto industry since 1950s. It's Tesla's world. Everyone else is paying rent. I think last night was just another chess move while other product makers sit there playing checkers. What about this? The factory potential delay of shipments. Now, that was something that was flagged on the call.
Yeah.
And big deal.
Yeah.
And that's one where, and to your point, a bit of a downtick production offline from a manufacturing perspective. See, I view that is really what's going to be the star of a refresh for Model 3s. I think that's a smart move. Because you're going to have refresher Model 3s. You got Model Y. And then ultimately the Cybertruck within production starts around Halloween. I think we will start to see Cybertrucks on the road in the month of December. Gigafactory after a 2.9 year over year decline. June, Shanghai sold about 84,159 vehicles in August, nearly 31. Increase from just 64,852, 6 from the same month last year. If this trend holds true this month, it will undoubtedly be beneficial for the company, its stock, and consequently its shareholders as China's EV competition heats up. In an attempt to increase sales, Tesla was obliged to drop the starting costs of its Model S and Model X automobiles. The Model S was previously constructed at the Shanghai High Giant factory, while the Model X was originally priced at 738,000 yuan from 8369. This occurs 2 weeks after Tesla had reduced the cost of the top tier versions of these two non-Chinese built vehicles in conjunction with this. Wedbush analyst Dan Ives looked at Tesla on a sum of the parts basis recently. The SOP valuation looks at and tries to value the separate businesses within a company in an attempt to give a better price valuation of the stock. In another note to investors, I've said to dive deeper into this of the parts valuation. We modeled and projected out Tesla's supercharger network, taking into account access and revenues from other OEM using stations across the United States. Tesla also lowered the price of its full self-driving FSD software by $3,000 in the US from $15,000 to $112,000, and by $3,500 in Canada from $19,500 to $16,000. In the end, we predict that Tesla's supercharger business will account for between 3 and 6% of overall sales, or $10 to $20 billion by 2030. While the supercharger network's opening to OEMs is a significant aspect of the Tesla story, Ives noted in the note that there are other aspects as well, implying that there are stronger production figures, thriving energy business, ongoing development on the side of autopilot and full self-driving, an unmatched ecosystem of batteries, and increased production in scale and scope, all of which contribute to a strong financial sheet for Tesla. In my opinion, this is Tesla's world. Everyone else is just paying the rent. I believe that the modifications we're seeing on Supercharger are only the beginning of a growth story that will eventually lead to what we think will be a battery that looks like FSD, the AI equivalent of the Golden Goose and the Gerber team. When it comes to these and Nicole's perspectives, Gerber Cow is the team, thought leaders. I believe that this is the get out the popcorn moment where everything is going to play out in this green tidal wave. But keep in mind that it's not just Tesla and Gina. There will be many winning companies in this $5 trillion green tidal wave, including Tesla's separate businesses. For example, the company recently signed agreements with several automakers to open up its supercharging network, and it has an artificial intelligence system that it uses to train its FSI software, which could eventually turn Tesla vehicles into robot taxis in light of all of the above. Ives rates Tesla as a buy with a price target of $350 per share within the next 12 months, which would be a 35 increase from the current price of $258. However, Ives also noted that a $400 valuation could occur soon. As for other factors that might be in Tesla's favor, an expert stated that the United Auto Workers strike against the big three automakers could benefit the company greatly. Ford, as the deadline approaches, concerns about Stellantis and General Motors are growing. Nathan Baume, an Access business reporter and co-author of the Access Closer newsletter, and David Madland, a senior fellow at the Center for American Progress and advisor for the American Worker Project, joined Yahoo Finance Live to talk about the potential strike and how it would affect the auto industry. Baume stated that there's a chance that all three of them strike simultaneously. Okay. And if that occurs, there will be a significant backlog in the auto industry. He also mentioned that Tesla would benefit greatly from a major strike if the automakers were forced to agree to significant pay increases because the company is not unionized. Nevertheless, Tesla has many advantages over Ford and GM. And speaking of those two legacy automakers, Dan sees a significant opportunity for Tesla to monetize their partnership as part of the government's plan to reduce carbon emissions to zero by 2050. Ives wrote in a note to clients, we believe Tesla is in a prime position to further capitalize on the EV transformation. There's also stated that Tesla is in a massive position of strength after building its EV castle and is now set to further monetize its success, point to the company's increasing ability to bring in revenue outside of EV sales. EV customers of Ford and General Motors should bring in an additional $3 billion for Tesla. He's calculated Tesla's groundbreaking agreement to share its supercharger network with Ford and GM is a money-making opportunity, and the company's profits are likely to keep rising once it is able to roll out its fully autonomous technology more widely. In fact, a long line of rival automakers have given up and agreed to join Tesla's supercharger network. Ford Motor Company was the first to break with tradition back in May, and it was quickly followed by General Motors and Rivian. This is because earlier automakers quickly followed suit, including Volvo, Mercedes-Benz, and Nissan, given this Tesla is expected to get up to $20 in an income from its most recent agreements with Ford for superchargers. As overall reports on General Motors and other automakers, the best point of reference for Tesla, according to Ives, is Apple in the late 2000s, when the stock price of the iPhone maker did not yet correspond to its profits potential. In this regard, we see Tesla in 2008, 2009, when Apple was just beginning to monetize its services and golden ecosystem. As Tesla is playing chess, I've stated in Thursday's research report that we see this quarter as a significant move in the right way, while others engage in checkers one. Of the biggest beneficiaries of the AI-driven tech stock surge is Tesla. This year, shares have increased by 130 sites, bringing its market capitalization to slightly over $900 billion. For further information, consider subscribing to Tesla stock.